Undervalued stocks, something that might seem a little bit crazy or impossible, but never say impossible, because everything is possible if you just do the work for the research. And today I'm showing you a couple of stocks as well as how to find them that are currently, even in this environment, are undervalued. Let's go. So let's talk about first what means undervalued, because it's such a word that it's so often used in this community. But undervalued for me is two things. First of all, it can be that the current company as it is undervalued by the assets or the revenue or the patents or the product or the team or the whole story. As of now, is undervalued at the price it's paid for a stock on the stock market. This is for me a number one reason, and this can be also differentiated in two different reasons. Okay, so first of all, you can say, okay, let's have a look into the books of a company. Let's have a look into the assets, and those assets could be airplanes, real estate, inventory. All of these things have a certain value, obviously, and if the overall value of the assets is much bigger than the value of the market cap that all stocks combined are traded on the stock market, then you can agree with me surely that this is called undervalued, but a very factual side. Okay, on the other side, you can also say, hey, compared to other companies, this company has the same revenue or the same product potential and so on, and such a great story, such a great management team, and it's as good as X, but X has 20-30% more value. This is a more argumental way to say, hey, based on the things the company has, assets in every form of way, this stock seems to be undervalued. And this both things are, to me, one reason of two that you can say this is undervalued. And I will give you an exact example of that later on in this video once we talked about the future potential overvalued cases as a stock, which we will dive in now. Another reason is to tell the future of a stock. Now, this is in my personal opinion, the more funny part or the more interesting part, because think about it. Think about, you could see Netflix as what it could become 10 years ago. Imagine you could foreseen when Amazon was still just selling books only, that they will be basically the backbone of the internet. Or maybe you could see the potential of the iPhone when Apple's still main product was the iPod. Now you can see all of these cases of developing companies is quite interesting when you are very early on. And people are saying to those companies sometimes they are overvalued. But in my personal opinion, in this case, I would state that those companies are undervalued, okay, by the potential that they have out there. And in this case, we need to look into the market, into the competition, into the management team, into the customer behavior over time. And if you consider all of this, which we will do also in this vlog, then maybe we can find out those companies that are undervalued by the big gain that they will have the next 5 to 10 years. Because if you find of those, and you don't have to be always right, okay? This is the beauty about that let's say that you will have 5 candidates that can 10 times their market value over the next 5 years, and then you just have to be right basically once. If this makes 10 times your investment, then the other 4 doesn't matter, because the one big one that you saw and invested in makes all of the other investments that did work out so well, because you maybe underestimated the challenges ahead for this kind of companies in the future, or maybe it was fairly valued for the company once you decided to invest into this company. Now, this is not the easiest part. The book value or the real value, asset value of a company to determine is much easier, and therefore this will be our starting point. Well, and the first way to look if a company is asset-based, undervalued, is to look into their numbers and reports. And I took a very good example here. I took the Lufthansa, which is one of the biggest airlines in the world. As you know, currently they are heavily affected by the current health crisis. But nevertheless, they're one of the biggest companies in the aircraft business ever. So the first assumption that I would take here is that, while the company's value can be very low because everybody's selling the stock, still they can have so much assets in terms of fleet that maybe this is a very unbalanced situation, and therefore you would need to look into those balance sheets. And at this point, if you don't know anything about the balance sheet, I would really recommend to you, there's thousands and thousands of videos out there on YouTube just how to read a balance sheet, and then within a crash course of 20-30 minutes you will be the king of balance sheet. And nevertheless, for Lufthansa, we go on their website. If we go on the website of Lufthansa, you basically go to the investor relations section, and then I opened the last business report of 2019. And there you can find a 258 pages business report. This business report was managed by the management of Lufthansa, well said, where you see all of the necessary business points. So, what is the cost of the company? What is the salaries? All of these things that they usually need to put to describe the whole business for you guys, for you investor to understand. Now on page number 26, you actually have a whole overview. This is what I personally looked into, because I'm thinking, okay, if this company might be undervalued, then let's have a look how many assets they have. And obviously the very first data point that I would look into is the fleet, right? So how much airplanes they are, how many planes of those are already paid, because some of them could be leasing still and still paid or financial. And then you basically look into the internet, what is the market value of this kind of airplanes, and then you can determine this. But let's have a crash course into that. So on page number 26, you basically see the whole fleet. It begins with the Airbus airplanes, and basically you all see here from the different Lufthansa group which airplanes are there into the whole group fleet. So a total of 763 airplanes, and then you can see 106 of them are still in the leasing, so they are not the asset of Lufthansa. So you can approximately say that maybe 650 airplanes are in the fleet and as assets. Now some of them are pretty much old or a small model, but the big ones are here, like the A380, where they have at least 14 pieces. And this all together, I did a detailed research then what is the market value of each into the second hand market for airplanes, and came to approximately value of 30 billion euros. So this is the hard asset value that Lufthansa has. Now we are going to the stock, which is currently trading at around €7.47. And this is the beauty about it. The market cap that you can see here is 3.54 billion euros. Okay, so now we have the two numbers. These are important. So first of all, we have an asset that the company has. It's just stored somewhere out there, and this is just the airplane. Then you have accessories, spare parts, all of these things that Lufthansa has as a value. Okay, so even when, let's say, Lufthansa would say, hey, you know what, guys, we don't want to be in the airplane business anymore, so we will sell all the assets, then maybe the 30 billion will be worth, let's say, even half of it, $15 billion, okay? And then compared to 3.5 billion euros, which the market values the company at, is a huge discount, guys. And if you think that the airplane business and airlines business will resume at some point, then maybe this is now a good time to buy the stock. Don't forget also the consideration by the German government for the bailout, so they get money to stay afloat and pay all the debts and, a lot of salaries and so on and so forth. Moreover, this is just the model. This is, you always say that you can fish the fish for the fisher and feed him for one day, or you show him how to fish fishes and you feed him for a lifetime. And this is what I try to do here, to show you how to do that. And you can apply this to any airline in the world. You can apply it to any cruise liner in the world and see which one is maybe the best choice for you. Also have to consider the debt that this company has, because if, let's say, from one day to another, Lufthansa would say, hey, we stop the business and we have assets valued $15 billion and we still have a loan or debt of 5 billion euros that we have to pay, then you have to destruct it, but it still would be 7 billion euros versus the 3.5 that it's worth on the market. So you can get a really bargain here, but let's dive into the future orientated undervalued stocks. And another period that I promised here was the future value of the company. This is a little bit, speculative, because who knows how the world will look like in 5 to 10 years. However, you can see those things that actually show you that the company is quite successful. Let's have some examples from the past. Let's say the iPhone. The iPhone was a gadget and the first phone ever by Apple, and many people were saying on Wall Street that maybe this will be a total disaster for Apple now. But if you saw and talked to the people who bought it, actually, they said that this is the best phone ever, and they recommended to their friends, and they're recommended to their friends, and those patents are really there. And if you're looking to buy, for example, Beyond Meat, check it out if your supermarket that usually stores this meat maybe is out of stock, right? Because so many people want to try it, so people love this product. And think about Netflix. Netflix was a company that was sending out DVDs. Now you could early on see that this is quite successful when Netflix was the #1 client of the US Postal Service, and there you have it. So you have these data points that you have with really much research you have to put into, or you watch this channel. So like and subscribe if you're new here. But as you can see, this method, it's a little bit speculative, because you can be so many times wrong, but you can be so many times right as well if you do put in the work. And otherwise, you always have also with this method to find the next big thing. And the growth stocks, you have the possibility to gain your capital dramatically, okay? Because think about it, if I'm thinking that Beyond Meat, for example, is the next big thing, if you're looking into the stock market value is maybe somewhere around $5, $6, $7, $8 billion. But I'm thinking, if this company changed the whole food industry, then maybe this would be $100 billion company. And if you consider that and you look into the company and you look into the revenues, which grow like 200%, then this are quite interesting signs for a company to be very successful. So the reasons to look into these companies that have huge potential is because they can multiply your portfolio quite drastically. However, it's harder to find, and it's really also a bit of speculative. It's not like black and white. You look how the food market in this industry and this company will be the market leader in that. It's a little bit difficult. Even so many people were wrong about Tesla, though I have said that Tesla is a great buy at $178 because they had just a great management team, the great product, the great customer that just wanted to buy more and more of Tesla, and it's just this innovation that drives these companies forward. I hope this helps you to find the next undervalued stock. Let me know in the comments what you think. What is the most undervalued stock right now on the stock market.